General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.
Good afternoon and welcome to another week of the Global Alpha podcast with myself and Finn.
Hey guys.
Little bit of a volatile week last week. We saw the markets show red again over the week period. So a fair bit to talk about and go through for this week. And I think Finn's got some more crypto insights for us, which will be good to see.
That's right, as per usual at this rate. But yeah, let's kick it off.
So just running through it, we've seen, the major indexes finish off the week lower last week. So we've seen a bit of pain in the markets. But, as we said when we spoke last week, there was, I believe, a fair bit of room, investors' portfolios to be trimming, which, allowed for the market to come off in those sessions that we saw. The tech sector had a few reports come out. Alphabet, Tesla, and semiconductor firms were all sort of in line with that market coming off. So, the usual bellwethers did not do what they usually do. And we've seen, the market come off overall in light of that. We saw consumer lows hitting historic levels in the US figures. So that's a bit of a concern for markets overall. And we saw with the markets coming off, the defensive sectors started to show a bit of stability, but they didn't really go against the rest of the market. They just held up with slight declines on some of the names like United Health and things like that. So a fair bit happening in the markets on the equity side. And it is really a question, are we going to continue to go sideways here, go down, or, return to that upward projection that we had all year?
Cool.
So there's the horror map of the last week. So you can see some big moves there from Nvidia and Microsoft on the downside, Meta as well. Broadcom, we've seen it move, and AMD just below it. We've seen those two move aggressively through this year. So, it is somewhat expected with how far those performances have moved. Another one of our recommendations in the technology sector, Palantir, you can see that was probably one of the worst affected of the figures that we can see on the map there. One of our longer term recs, but again, we were buying it at $80 last year. We're looking at it at as high as, 180 this year. Plenty of room for people to be selling into profit. So I think that sort of supported that downward momentum. In light of defensive stocks, Eli Lilly, pharma being, traditionally, or healthcare being traditionally a defensive sector. So we can see Eli Lilly had quite a bumper week. And some of those other healthcare squares are green, which is interesting. It shows, people sort of flock to your defensive names when markets are questionable.
Yeah, look, and I think, we're kind of advising clients at the moment, even after this pullback, it's not a terrible time to be looking at taking profits. If you are in profit, having a little trim here, just in terms of good risk management, it's not the worst play. You got to do it at some point, right? So, it's impossible to sell the top all the time. So yeah, it's not the worst time to be taking a little bit of risk off the table, I think.
And, holding cash is never a bad thing, especially if we're seeing lower prices coming down the line. So yeah, can't agree more with you.
Yeah, cool.
So earnings last week. So we'll just go sort of in review of how some of the names that we were following last week went. Even though we've seen most of these stocks sell off in the those last week sessions, we've seen some pretty good results from them. Palantir beat estimates quite strongly, but again, market sold off the back of it. AMD, very strong beat as well. I believe it was around 15% beat on expectations. So, pretty strong result there. Again, we saw on the heat map, there was quite a bad sell-off over the week for them. So even though there's positive earnings coming out from them, the market has that room for downside. Qualcomm as well, another beat there. So you can see sort of your AI chip stocks, they're all doing what we thought they would in terms of revenue this year. But again, Qualcomm had a negative week overall last week. Now, Uber and Spotify, Uber missed its estimates. It beat on revenue. Not a business that we were recommending or have really been looking at this year. So sort of solidified that sentiment from us. Spotify beat estimates, but the market didn't seem to like the performance of the stock to date, and that money came out of there as well. And then finally, Novo Nordisk missed its estimates, and we were sort of expecting that with all the headwinds it's experiencing with Robert Kennedy in the States. Now, next week, there's a mixed bag. We've got CoreWeave and Grab. Grab's not a recommendation that we have. It's just interesting to see how they'll be reporting because it's in a similar space to a recommendation that we've had previously on Lyft and DoorDash. So I just want to see how sort of the peers of recommendations we've had before have gone. I'm not sure if you're familiar with Grab, Finn. I know you've done a bit of traveling, but in Southeast Asia, Grab are pretty much the main Uber type service.
Yeah, interesting. Didn't know that. Didn't know that at all.
So Thailand, Indonesia, very.
Are they doing the tuk-tuks?
No, so
Okay.
it's pretty much just bike rental.
Okay.
You just get
right.
back with a bike or a car
Yep.
rental. So
Yep.
big market there. I'm
Yes.
not sure, when you're there, you're pretty much always using those services, even for delivering food and things like that. So I'm very interested to see how that market's going. Moving on from them, Seagate and Oklo. So Oklo's was a recommendation of ours, and I think it is in one of our structured products for the power supply regarding data centers and AI demand. So we're very keen to see the results there, but we've done very well on Oklo to date. So yeah, we'll just wait and see on those results there. Tencent Music will be interesting to see because, Spotify sold off. Generally, they're quite tethered to each other. So I'm expecting Tencent to report well, as did Spotify, but I don't know how the market's going to fare, especially with how it's run up until now. Disney's another recommendation that we've had previously. So keen to see their results. We did sell out of them earlier in the year. A little bit of headwinds for the business as a whole. They had a bit of controversy around Jimmy Kimmel and things like that earlier in the year. So I want to see, they had a huge loss of users really around that controversy. So it'd be interesting to see, was that loss sustained? Did users come back to the platform? Just to see those results there. Applied Minerals and Sony as well. Not really recommendations that we've ever put out or done a deep dive into, but both in that sort of space that can be quite strong yielding for investors.
Yep. And the crypto in me wants to shout out Circle. Also, it's interesting to see how the market will react to that.
So Circle's a trading platform, is it, for crypto?
They're a stablecoin issuer.
Okay, cool.
So they issue USDC stablecoin, and so they're basically just autopilot generating revenue through treasuries.
Okay.
So it's an interesting business model, but obviously the more stablecoins in circulation, the more they earn.
This would be only their second time reporting as a listed business. Is that right? They're fairly.
Yeah, that's right.
Yeah. Okay.
Yeah, that's right. So they're listed. Earlier in the year. New business, but very steady revenue. Look, I suppose, if you're sitting in crypto, and you don't really want to hold Bitcoin, if you think maybe the cycle's over, instead of going back into the dollar, you might want to look at stables because it's more accessible to get back into crypto once it drops. But yeah, look, moving on to a bit of crypto. Over the last 3 weeks or so, we've seen a massive amount of volume come into privacy coins. And a little bit of background on privacy coins. So Bitcoin, obviously, it's a very transparent ledger. And it's very traceable, right? And so the narrative around privacy coins is it's more of an anonymous form of cryptocurrency, and with the growing institutionalization of crypto and Bitcoin, I suppose there's been a bit of a narrative around that, and really that's all it is. It's just a narrative, which has caused, I suppose, Zcash, which is the first runner-up, to actually rally nearly 20 times in value. So it's about 17,000%. So it's a nice little run-up if you caught that early. And then as a result of that, and this is where the kind of easier alpha is to look at other privacy coins and kind of use that narrative to trade the tailwinds of that run up. So we've seen Dash, of much older cryptocurrency, do a similar kind of run up, do about a 10x over the last couple of days. Not bad, and easier to, I suppose, time that kind of trade, because it was after Zcash. And then soon after that, we've had Monero run up as well, and it looks like it's just had a bit of a volume
Which of the
spike.
charts was not Zcash, the second one you mentioned?
So this big one here is Zcash. That's the
Yep.
biggest run up. Then we've seen Dash
Okay.
run up here.
Yep.
So that's corrected pretty heavily as well. But yeah, that was trading about $25, and now it's at 150. So pretty solid run up there. And then Monero, which is actually the largest privacy coin, was the last to have a bit of a run up. And who knows, it might not be done yet. We've only just recently had this volume spike. Yeah, look, it might not be a bad trade. But yeah, we're not advising clients in the crypto space just yet. But look, it could be an interesting opportunity if you're watching the podcast. You never know. That's right. That's right. We love a strong green candle. And doing a little bit of divergence, I've also been looking into the kind of revenue generators in the space. We've seen a lot of revenue kind of being pumped through these newer generation DeFi protocols. And here you can kind of see all the kind of top revenue generators. And in a market where, everything revolves around market cycles, it could be an interesting place to go to, kind of back to fundamentals, and look at who's actually generating the revenue. And, as the market potentially pulls back, it could be an opportunity to get some of these at a good deal. So the main ones I'm looking at is Hyperliquid and Pump.fun. So if I kind of build a bit of a price to earnings model on this, based on fees generated from the protocol. And these two assets in particular, or cryptocurrencies in particular, they use pretty close to 100% of the fees generated to actually buy back the token. And then some of those tokens that are bought back are either burnt or distributed to token holders in a staking contract. So seeing pretty attractive price to earnings numbers. We're seeing 4.4 times price to earning on Pump and 10 times on Hype. Hyperliquid is Perpetual's decentralized exchange, so futures contracts exchange. And Pump.fun is, I don't know if you know much about the meme coin kind of side of crypto. You probably do. It's been very talked about over the last year or so. But they're the meme coin origination platform. So you go there, you create a meme coin. It's a bit of a liquidity algorithm that goes on when you kind of put it into existence, but they generate fees from that process, and they've been very fruitful, generating annualized fees of about 930 mil, and Hyperliquid, they're generating 1.4 billion in fees roundabout.
Wow.
So yeah, it's interesting to see in crypto.
Very interesting. So will we be looking to put recommendations out on these, or?
Yeah, look, I'm taking it slow, but I think it's if we ever get around to doing, I suppose, a watch list or a high conviction watch list, I'd be looking at these in particular. And, I wouldn't be putting a massive amount of my portfolio into these because, there is obviously still a lot of speculation involved. At any moment, they could stop buying back the tokens. It's a very unregulated environment. But obviously with that risk, there's potential for some pretty nice returns as well. So it's all about risk to reward here. And I think these ones look pretty good. So if we did have a high conviction crypto watch list, I'd be putting these two on there, and obviously the standard Bitcoin, which I'd be recommending dollar cost average as we're in this hyperinflationary era. But that'd be my 3 picks for the moment.
Well, thank you for those insights. I think everyone needs to sort of have a bit of an idea of what's happening in crypto. So it's great to have you on and, give us those insights into the wider market, not just Bitcoin and the main ones that we read about regularly.
Yeah, thanks, Nada. Appreciate it. And yeah, look, I think that pretty much wraps up crypto for me. If there's any other questions or anything like that, feel free to reach out. But Nate, if you're happy to close it off here, I think it's probably a good time.
Absolutely. So thanks for joining today. Give us a call if you have any questions about Global Alpha or crypto. Myself and Finn are happy to assist at any time.
Thanks, everyone. See ya.